Now, even though I absolutely love my long-term dividend portfolio that I've been building now for 7 or 8 years, to be completely honest, if I were to do things all over again, my long-term portfolio, although it looks somewhat similar, would also look very, very different. Now, what I mean by this is that there's certain positions in this portfolio that are too small, certain positions that are probably overweight, and certain stocks and ETFs I wish I would have never bought in the first place. So to make things really easy, in this video, we're going to go through a 5 ETF portfolio, super simple, that I would consider just about as high quality as any. This portfolio is going to have just 5 positions in it that are going to offer massive growth, dividends, and dividend growth all in a simple 5 ETF portfolio. So if you want to see what I think might be the highest quality 5 ETF portfolio across the entire market, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first ETF that I would definitely have inside of a 5 ETF portfolio if I was looking to achieve massive growth, massive dividends, and some huge dividend growth on top of that. Basically a little bit of everything. I want some growth, but I also want a ton of income. The first position would have to be ticker symbol SCHD, or the Schwab US Large Cap Growth ETF, which is up almost 50% in the 1-year time frame and up almost 29% year to date. Now, this ETF has been an absolute rocket ship over the years. As you can see right here, basically throughout history, this ETF is consistently trading at all-time highs. Not to mention, this ETF just did a share split along with all the other Schwab ETFs, so it seems to be very, very cheap right now, but keep in mind that is just because of the most recent split. Now, the reason I would pick this ETF out of one of the 5 is because, like I was saying earlier, I'd want part of my long-term portfolio to be focused on growth, and part of it, of course, to be focused on income, and this ETF focuses on growth very, very well. I mean, the top 10 names in the ETF are things like Apple, Nvidia, we have things like Microsoft, Amazon, Meta, Alphabet, Broadcom, and so on and so forth. Around 231 different companies that have all consistently been growing over time, not to mention around 51% of the ETF is focused on technology, which as long as technology keeps doing good, SCHD will definitely follow. Now, even though I am more of a dividend income focused investor, SCHD only has 0.42% trailing 12-month dividend yield. But let's be real here, no one's really buying into this ETF for anything but growth, and that's exactly what it's offered historically. Now, because I am more of a dividend income focused investor, like I said, I'd probably make this ETF a smaller portion of my long-term portfolio. Not saying that that's right or wrong, but just because I personally favor income a little bit more, favor cash flow, but I would definitely have a sliver of this one in my long-term portfolio if I could start over. The next position that I would have in this portfolio if I was building a super high quality 5 ETF portfolio, if I was starting over that is of course much more SCHD. Now, even though I do currently hold on to a ton of SCHD in my long-term portfolio, this is an ETF that I really wish I would have been buying when I first started investing back in around 2017, 2018, because just imagine how much I'd be up in my position, not to mention how much my yield on cost would be, etc. Now, I like this ETF specifically because it offers dividends and growth and a ton of dividend growth, at least it's done so in the past. The top 10 names in this ETF are things like the Home Depot, Cisco, names like BlackRock, Bristol Myers, Chevron, Lockheed, Verizon, etc., etc. All in all, around 100 different names are inside of SCHD that all have been paying dividends and raising their dividends over time. Not to mention SCHD, even though it is more of a dividend income focused ETF, this ETF has also grown over time quite a bit. So this ETF alone kind of gives you a little bit of the best of both worlds, some dividends, some growth, and a whole lot of dividend growth, around 3.5% yield, but also on top of that, massive dividend growth historically. 12% some years, 11% some years. Either way, historically speaking, investors have been getting paid larger and larger amounts of income pretty much as long as they've been holding on to this ETF. Now, for those reasons and more, I would definitely include this in my basket of 5 ETFs if I were starting over to build out a super high quality portfolio. The next name that I would definitely add into this 5 ETF portfolio, something that's very stable, something that's grown over time, and something that offers a ton of income from day one. I'm talking about Divo, the Amplify CWP Enhanced Dividend Income ETF. This ETF doesn't necessarily get the respect that it deserves, in my opinion. This ETF is up around 20% in the 1 year and up around 12.2% year to date. On the max time frame, Divo is up around 64%, but keep in mind Divo also offers a ton of income from day one. Divo offers around 4.5% trailing 12-month dividend yield with a tiny bit of dividend growth historically, but Divo offers monthly income to investors, which is around the 4 to 5% range. which is not bad whatsoever, especially because there is also upside on top of that. Now, Devo utilizes a small basket of holdings around 40 different single stocks and then sells covered calls on the single stocks to generate a ton of premium and income for investors. Sure, Devo does have a little bit more of an expense ratio at 0.56%, but it's definitely made up for it. Devo historically has returned around 11 or 12% annually if investors were to reinvest those distributions along the way. Now, for the reason that I do focus on income in my portfolio, I would definitely want to have a ton of Devo right from day one, which I'm happy to say that early on in my investing career, I did actually buy a ton of Devo way back in the day. Now, the next ETF that I would definitely have in my portfolio, if I was starting over from day one, building out a 5 ETF foundational portfolio, would be to have a ton of JEPQ or the JP Morgan Nasdaq Equity Premium Income ETF, which, just like the name says, of course, is mostly focused on income, although JEPQ has also grown a ton over the last year, up around 20% in the 1 year, around 11% year to date. Either way, not bad whatsoever, considering this ETF offers around 10 or 11% trailing 12-month dividend yield. Now, from day one, investors are going to be receiving massive dividends compared to what you'd receive with most stocks or ETFs in the market. That's going to allow you to either use those dividends to pay for things like bills, of course, or if you're like me, you own JEPQ and you use those dividends to buy yourself more shares of JEPQ or other stocks and ETFs across the markets. Now, if I were starting over, I would definitely want to have some more income-focused ETFs in my long-term portfolio because, like I said, I would want to have a lot of income coming in to reinvest into more growth names, more dividend names, or maybe a little bit of both. But JEPQ would definitely make the cut. This is one of my favorite ETFs across the entire market and has got to make it in the cut for a video like this. Now, there's so many ETFs to choose from, but as of right now, this is probably one of my favorites. I'm talking about SPYI, the NEOS S&P 500 High Income ETF, which I've been buying like crazy over the past year or so. Now, this ETF's up around 12% on the 1 year. Year to date, only up around 6.4%. But keep in mind, SPYI offers around a 12% trailing 12-month dividend yield with distributions anywhere from 50 cents to 56 cents as we saw as of recently. Now, this ETF allows you to have more exposure to the S&P 500, but then along with selling options and buying options, this ETF offers a ton of income potential to investors. Now, in the long term, I don't necessarily think SPYI is going to shoot up an ETF price like something like SCHD or even SCHD, but this ETF will probably offer consistent income for investors, which, like I said earlier, can be used to buy more shares of more stocks or ETFs, or of course, use to pay your bills in the future. So those are 5 ETFs that I personally would choose as of this point to build out a super high quality portfolio with a little bit of growth, a lot of income, and of course some dividend growth on top of that. Now, the cool thing about investing in the stock market is that over time, when you find different stocks or ETFs that you like, you can of course sell out of some positions, move some money around, and really shape your portfolio into the final form that you really want and that meets all of your objectives and all your goals. But those for me are some of my favorite ETFs across the entire market, and now you guys know what I'm going to ask. Comment down below some of your favorite ETFs across the entire market, and if I were to ask you to build out your dream portfolio with 5 positions, which ones would they be and why? Let us know down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.